Hello, it is the 9th of March 2011, and tonight I'll be a special guest on Jack DeAngelis' radio show, The Collector's Coach, at the collectorscoach.com. So if it's still time available and you want to tune in, head on down to the webpage. And I was there last week. It was an exceptionally good time. And if you see this later on or you can't attend, the archive should have it. I'm not too sure how to find it, but from what I've heard, they do tape the shows and they replay them. So let me go over today's analysis. The intraday level for the price of silver, both priced in dollars or in gold, had a very minuscule increase today as it gained about 9 cents or a little over 1 milligram on the price of gold. And well, this isn't too common yet, and this is still common, that of pricing it in dollars. But I like this because it shows real money. I don't like this chart too much, and what I want to do over the weekend is try to make this a little bit better. This only goes from 9:30 p.m. to 4, and I'm going to change that. It's going to go from 4 to 4, or I think it's 5 to 5. Either 5 to 5 or 6 to 6. It really doesn't matter. Nothing really happens from 5 to 6 o'clock Eastern anyway. But yeah, this is pretty much how it looks. Now, what's interesting here, at least on the price in gold, is you have the left shoulder, head, right shoulder. You can even say that there's one neckline roughly here, but this part here. However you want to look at it, it shows that previous resistance was used as support. Anyway, moving on, we'll move on to the daily chart, the candle. And it's been a broken record. I don't know if I need to explain what this means because I explained it here. To a degree, I explained it in here, I explained it here and here. It's a consolidation within the current trend, and the current trend is obviously a bullish trend, and it's indecisive. Overall, these things usually balance its way out to the path of least resistance. In this case, that's higher, but it's not always going to do that. And if it really can't keep doing that, because what would generally happen is either it's got to correct through time for a decent period. That really hasn't happened. The last time we've had a decent time correction was in here. Or we have to have a significant price correction. The last time we had that was in here. Or explosive gains, and we really haven't encountered that as of yet. I don't see a move from 31 to 34 in 3 days to be explosive. Explosive is 10% in a day, 30% in a week, that sort of deal. Now what I'm going to do is switch this to a line chart. Same time frame, the daily chart, but more data, more time, if you will. And it's a line chart. The lines on there, the moving averages. This is a Fibonacci retracement at the exponential level. The blue line represents the 200-day moving average. This one represents the 50-day moving average. And I was stating here, whenever you go below it like this, and it just recaptures it and goes well above it, you often get that fast move. Well, that's what happened. The fast move has already taken place from the breakdown below this significant level in here. Now, as far as this trend line is concerned, the trend line, the stats are at the top. It increases 0.14. That's a typo in here. It increases 0.14% per day. And the increase from here to here is either 44% down or 78% up. So I drew this line in here, meaning it looks as if we're breaking out past this resistance very nicely. Be interesting to see if this does manage to encounter a significant level of resistance from one form or another. As far as the Fibonacci is concerned, and another thing also is that this is the running average, not using any volume since the $8.46 lows back in October of 2008. But as far as the Fibonacci is concerned, right now Fibonacci is roughly at around $20 per ounce. This is the 38.2. Now, what I have noticed in the past on so many different occasions is that the 38.2 and 61.8% just happens to align itself at a major important level. And that's where we're at right now. Because if we take this line in here, let me just get a straight line instead. If we get a straight line and we mark it within this Fibonacci level, this is a big line, we can see here that it's, I don't like this line. Let me get a smaller one. But we can see how it's already broken above this significant high. Now that was the level of the 2008 high, which is not shown on this screen. And if we look at this level in here, well, it's gotten above it very nicely. So this is, to me, pointing out to be that of a bullish behavior, that the market didn't top out right in here when the Fibonacci was at this major resistance point. Therefore, what would be the next major increase for Fibonacci? I mean, it's not here. I mean, if anything, it's right in here. So if Fibonacci works its way up to here, you know what? I'd be really considering this to be a big move, because that would take us close to $70, $80 an ounce for Fibonacci to make it to this level on the, this is a long-term chart, or partial long-term anyway. And that's what I'd be seeing as a possibility to happen, because it's not often that Fibonacci just happens in an area that's really not that important. It usually contains much significance along the way. Now I'm going to switch this up to a shorter term time frame. This is the hourly data, and I want to talk about the pattern of lower highs and higher lows. And here we are, 1, 2, 3, 1, 2, 3. Each one of those is officially, this one's officially lower than this, and this one's barely higher than this. But what's interesting is when you get this pattern, it generally happens in an indecisive market, usually after a big move up or big move down, and well, there's a big move up. And what happens is it's indecisive. Usually the breakout would occur. It would big volatility. Volume would be usually rising, but the movements that happen in an hour or a half hour or in 5 hours would be extremely massive in comparison to what we're getting. So we'll see how this plays out. I've got this also on a line chart. The 15-minute line chart is passé, and this is pretty much the one that's replacing it. Pretty much like the daily chart, the Fibonacci, the moving average is on here. This is the 5-day moving average. In fact, this is a daily chart. We've already looked at that. Let me just see. I'm going to have to open it up because I don't got it ready on me. Okay, here we are. This is the this is a line chart of silver over the last 3 weeks or so, and the trend line increases at 0.07% per hour. That's this trend line in here, and the increase level is 4% from bottom to top, or 3.8% down from top to bottom. And I drew in the bottom trend line just recently because we are breaking below there, but mainly it's just showing that we are correcting through time more than anything. We've yet to have had a test of this rising 5-day moving average since the intermediate bull market has come into play. And this is a significant Fibonacci. This is a bigger one. We need this line to hold for the rally from here to here to be a successful one. So thank you for tuning in, and have yourself a great day.